Hey, Bulls and Bears YouTube family, it is Friday. Happy Friday, January 28th, 2022. Hope everyone is well. Wow, we've got a lot to get caught up on. Sorry, it's been a bit since I put out an update. It was earlier in the day yesterday. A lot has happened. But let's start off right here. This was an interesting one here. This is a little bit off topic, but not really, because this has to do with finances and the Jeopardy winner that won a lot of Jeopardy matches, like 40, is getting a shock in taxes. Let's take a look at how much they're taking from this Jeopardy winner. And then we're going to get into some other economic news, including the market. So stay tuned. Look at this first. And here's someone, Amy Schneider, won 1.4 million in Jeopardy, but not really. Take a look at how much she's actually going to end up with at the end. Now, the funny part is she was already probably pretty well off. She's from Oakland. She's a software engineering manager, but she won 40 straight bouts of Jeopardy, or rounds, or games. Now, she didn't break the all-time record of 74 consecutive games won on Jeopardy, but she still managed to take home 1.4 million, or I should say 1.4 million. But look what she's actually taking home after Uncle Sam comes in and after the state comes in. Well, this is going to put her in the highest tax bracket, with more than $1 million being won. And she'll have a 37% federal tax rate for a portion of those earnings. In total, she's going to owe $471,000 in federal taxes and more than $150,000 additional in California taxes. Total, she's paying in $625,000. So out of the 1.4 million, she'll be taking home $755,000. So over $600,000 in taxes for her winnings. Now we know why some of these people that make a lot of money, a lot of times they'll end up broke. People that win the lottery, a lot of athletes that make millions of dollars, that have multi-million-dollar contracts. You read about them a few years later and they go broke. Of course, not all of them. There's the Shaquille O'Neals out there that go on to be even more wealthy with all the businesses and commercials they do. But a lot of times you hear these stories of these people going broke after winning millions. And that's a big part of it. I think people don't really know or expect that big of a bite, once you hit the jackpot, so to speak. All right, but let's go ahead and take a look at what's going on here with the markets today. Pretty big green day. It looks like the plunge team was in full force today. Dow Jones up 560 points. That was about a 1.6% increase. The NASDAQ even bigger, up 3%. S&P 500 up 2.4%. Russell 2000 nearly 2%. Also saw oil hold above $87. Not good news for people that have commutes and have to fill up their gas tanks quite frequently. But take a look at what's happening globally. Not just the Fed is talking about raising rates and becoming more aggressive in this tightening or reduction of their balance sheet. We see that other central banks around the world, in fact, more than a dozen central banks, have already hiked rates, with more to come. And here's a map here. This is out of Bloomberg. And we see the regions listed here in the green are set to end QE next week. The ones in the blue are hiking rates in 2022. And the darker blue are actually hiking rates this week. We see a lot of South American countries there. Wow. So what are the odds that all these central banks are talking about and actually doing rate increases and reduction of balance sheets, reduction of QE, all at the same time? You would almost think that these banks are, kind of colluding together to make these decisions. And it's going to be a real interesting year, because we have debt at all-time high levels, heads and tails above the levels of debt that we saw before the financial crisis. And now they want to hike rates even after keeping rates low for 10 years. All of a sudden now, we're going to see tightening and rate hikes. What will that mean for the economy? Or will we even get that far? Will banks just backtrack? I've told you my thoughts on that. I think banks will backtrack. I don't think they're going to follow through once they see the carnage begin. It's my opinion that we're going to see emergency rate cuts, even if it's only a slight quarter percentage increase. And if the carnage is bad enough, I think they're just going to backtrack and start cutting and pick up more QE, start expanding their purchases once again. The saying goes, we've seen this movie before. We've seen it before. So please let me know what you think down in comments. And what do you think about these global rate hikes? Why are all these banks doing this at the same time? Are they all getting together and deciding to do a global tightening at the same time? That way, it won't just be one country suffering. It'll be multiple countries suffering at the same time. Could be. Well, markets overall pretty strong today, but homeowner stocks have been slammed pretty hard. And we see a chart here. This is of an index of home builders. And again, this is just on the talk or the prospect of higher interest rates, higher mortgage rates. These prices have been pushed to such extraordinary levels, and it's based on never increasing interest rates. So the prices that we're seeing right now are basically pricing in a future of near zero or zero interest rates, and even the thought or talk of raising them causes panic. And you see the plunge team had to come in and rescue the markets. There's a lot of ETFs out there getting slammed. A lot of the ETFs are not part of these S&P 500. Some of them are, but not all of the stocks that make up an ETF are all in one of the major indices. So it's going to be interesting to see some individual stocks and how they're going to perform. And maybe the plunge team won't come into all these individual stocks that aren't part of the big indexes. And we're also seeing carnage in Robinhood. Let's take a look at Robinhood stock here. Robinhood lost over 1 million users. Over 1 million users. Their revenue is down. And take a look at this enormous drop since the IPO. When we jumped up to over $70, we're down here now to about $12 a share. So imagine jumping into this stock. Imagine that, maybe buying in at $70, and now you've lost about 80% of your worth there in that stock. Now pay attention to this pattern right here. When you see a straight up and down, nearly vertical price rise, be careful. You don't want to jump into something. In my experience, you don't want to jump in at that point. I'm not giving advice, but that pattern, that straight up and down vertical pattern, is very dangerous. And look what happened to a lot of people that bought into cryptos. It was a similar pattern. But what happens is when people see these rapid gains, people like to jump in. You've heard the term FOMO, fear of missing out. And it seems like the level of desperation I'm seeing, I'm just hearing about a lot of people losing money in these markets right now. And a lot of people were in heavier or more heavily invested than they really should have been. But when people are buried under tons of debt, they tend to become more desperate and take bigger and bigger risks in the market to try to make up for it. So bottom line out there, folks, be careful in these markets because we're headed into some more wild, volatile times, including what we're seeing in the markets. We're seeing whipsaw prices intraday on these Dow Jones and other major stock indexes. Maybe you're making tons of money day trading these moves, but overall, I would just encourage caution. And we're seeing relationship stress, anxiety just shooting up, skyrocketing as the economy continues to deteriorate for the average working person. It's getting harder and harder for a lot of people to remain stress-free, but try to focus on the basics. Try to stay healthy, eat right, get enough sleep. Do the things you love to do. I happen to work on music on the side, and that keeps me kind of keeps me sane, keeps me happy. That and family time. Just try to focus on the positives. I had a customer. I'm still working a job. I had a customer that lost his wife, his son, and he's an elderly guy, not really that old, only like in his 70s. Fell down and broke his hip all in the same month. Lost his wife and his son. Fell down, broke his hip. Didn't have his cell phone to call 911. He had to crawl all the way up his stairs because he was in his basement to get his cell phone to call 911 with a broken hip. Be thankful for your health. That's why I say stay healthy, keep stacking. Stay safe, everybody. Love y'all. Peace, big love. Bye now.